The comfortable choices that secretly keep you poor. Let me start with an uncomfortable question. If your life looks fine on paper, why does your bank account never seem to move forward? Not backward, just stuck. Because for millions of people in the US and Europe, poverty doesn't arrive through disaster. It arrives quietly, through comfort. Picture a very normal situation. You earn €3,200 a month after tax in Germany, or $4,200 in the US. Nothing flashy, nothing terrible. Your rent or mortgage takes about 35%. Your car payment or lease takes another 10 to 15%. Utilities, phone, subscriptions, insurance, another chunk gone. You still go out sometimes. You still travel once a year. You still feel middle class. And yet, by the end of the month, there's almost nothing left. Not because you're irresponsible, but because every decision you made felt reasonable. This is where the trap begins. Most people don't make bad financial choices. They make comfortable ones. A slightly nicer apartment because you deserve it. A newer car because it's reliable. Monthly payments because everyone does it. Individually, none of these destroy you. Together, they quietly own your future. Let's do simple math. A $450 car payment over 6 years is over $32,000. Add insurance, maintenance, interest, you're closer to $45,000. That's not luxury, that's normal. But here's the part people miss. That money didn't just get spent, it never got the chance to compound. If that same $450 had been invested monthly at a modest return over 30 years, you're not looking at a car. You're looking at hundreds of thousands in opportunity cost. Not because investing is magic, but because time is. So why do smart, educated people keep doing this? Psychology. Humans optimize for short-term emotional relief, not long-term math. Comfort reduces anxiety. Predictable payments feel safe. Upgrades feel like progress. And society quietly rewards this behavior. You don't get judged for financing a car. You get judged for driving an old one. You don't get praised for low expenses. You get praised for appearances. So people don't overspend to show off. They overspend to belong. The system reinforces this. Banks profit from your predictability. Companies profit from your monthly commitment. Employers benefit when you need the paycheck. Debt doesn't just cost interest, it costs freedom of movement. When your lifestyle requires your income, your options shrink. You can't take risks. You can't step back. You can't slow down. Not because you're lazy, but because your comfort became fixed. Ignore this for 20 years, and the result is subtle but brutal. You earn more, but feel no richer. Your lifestyle scales with your income, and your net worth barely moves. Retirement becomes a question mark, not because you failed, but because you never questioned normal. Now, here's the shift. Financially intelligent people don't chase discomfort. They also don't chase comfort. They chase optionality. They ask different questions. Is this decision how reversible? What does this cost me in time, not money? Will this payment still feel small in 10 years? They don't avoid spending. They delay locking themselves in. They value flexibility more than status, and liquidity more than upgrades. Quiet choices, unimpressive choices, but over time, those choices compound into leverage. This isn't about guilt, and it's definitely not about deprivation. It's about awareness. Once you see how comfort can quietly tax your future, you stop confusing normal with safe. You don't need extreme frugality. You don't need side hustles. You just need to understand what your comfort is costing you before it becomes permanent. If this perspective helped you see money a little more clearly, consider subscribing or liking the video. Not for motivation, just for better questions next time. Thanks for watching.